the real demand for EVs in general, and Tesla in particular, look in, the, I guess, the near and intermediate term? Do you have a view on that?
Yeah, I mean, I've always thought that not only Tesla, but the entire EV market is going through a rough patch this year and likely into the next year. You know, my long-term view is still optimistic about EVs. I think there's enough policies out there to push, you know, greener vehicles, more greener vehicles on the road. I think the issue today is about affordability. There's actually not enough affordable EVs out there for the masses. Currently, a lot of vehicles are expensive. They're over $50,000, and no, not a lot of people can buy them, especially during high interest rate environments.
So that has been the rhetoric really for a bit. And Elon Musk seems to say, okay, we're going to do the lower cost, but give us a second, right? We had this wave of Model Y, Model 3, et cetera, and now we're going to have another wave of more affordable EVs. When does that wave happen?
A lot of it actually comes online at the end of 2025, starts coming online at the end of 2025. That's when you have the Model 2. GM is also relaunching the more affordable Bolt. All of them are, you know, 30,000 or less. And then you have, you know, GM will continue to roll out cheaper vehicles. And you have Rivian also launching the R2 and R3, you know, in 2026 and 2027. So
who doesn't want a car named R2, by the way? Yeah. Total side note. I mean, everyone. But go ahead.
Yeah, but, you know, a lot of more affordable EVs coming in. And the hope is that, you know, the addressable market for the EV market, for the EV industry expands as more cars, cheaper cars come on the road and are available to consumers.
But if I were an investor in this company, I'd be saying, okay, you need to bring in a cheaper priced car for the mass market, but I'm not sure you can convince me that you can do it at a profit. What's the expectation of their ability to churn out lower priced models on a per unit profitable basis?
That's a very good question. I think scale is the most important thing. I mean, this is a scale volume game in the auto industry, has been like that for 100 years. So, you know, the question is, you know, are the cheaper vehicles going to resonate? As you push more production through an assembly plant in the auto industry, the unit cost does fall significantly in a logarithmic kind of trend. So we're hoping that it'll cut. But specifically to Tesla, I want to also mention that they've done a really good job in vertically integrating their processes throughout the whole value chain, right? And that actually does cut costs, especially in, you know, newer tech like this. You know, if I look at over 100 years ago, Henry Ford basically did the same thing. You know, switching everybody from horse carriages to automobiles actually required Ford to vertically integrate and able to manage costs and manage design and be nimble and flexible to react to consumer tastes.
In the meantime, before we let you go, just that stock has been so painful. Like 160.29 is sort of the low that we saw back in April, and then after that, you got to go all the way back to nearly $100. Do we get there? What do you think?
I mean, I don't think it'll get there. I think there's still a lot of value in the company. They've basically, changed the paradigm, shifted the whole entire auto industry in terms of vehicle design, in terms of manufacturing. But don't forget, right? They also is doing a lot around full self-driving, autonomous vehicles. They have a supercomputer that's actually doing that for them. So there's still a lot of hope. I think if you talk to the bulls in the street, there's still a lot of hope in them rolling out the FSD, the full self-driving, full to everybody on the road and get to level 4 and 5 autonomous driving.
All right, Steve, thanks so much for joining us. Steve Mann, Global Autos and Industrials Research Analyst, Bloomberg Intelligence, coming to us from Princeton, New Jersey via the Skype thing. Again, Tesla down, down 6% today on that pretty big, actually most of the analysts are saying an extraordinarily big miss there, really a surprise to the marketplace. Stock down 6% today, 34% year to date. And again, as you mentioned, Alex, the company in the press release calling out a lot of supply issues as reasons for the miss, not calling out a demand issue. But of course, that's what a lot of folks are concerned about as they think about not just Tesla, but just kind of the EV market in general. So trying to think about the ultimate demand for electric vehicles in this market. We're going to have more coming up. This is Bloomberg.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to build a path towards that. Almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded,
getting the resources, whether it be fundraising or allocating your resources. So strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
Decline of 0.9%. We're at 51.96 on the index. The Dow Jones Industrial Average, 408 points lower. That is a decline of 1%. The Nasdaq 100 down 230 points, down 1.25%. As far as Treasury yields, the more policy reactive 2-year, it's actually lower right now, down 1 basis point, 4.69, and the benchmark 10-year yield is up 5 basis points. That is at 4.35. That's around the highest level of this year. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
All right, thank you so much, John Tucker. Appreciate that. So let's add one more name to the downside here. It's Apple, down 0.6%. Although it could be worse, like it could be Tesla. So there is that. But I take a look at this chart, Paul. It is ugly. We surpassed the low that we saw earlier in the year, in early March, I should say. The next level, if I just look at it, looks to be what we saw at the low back in October of 170. I mean, it looks really, really ugly. And you have to wonder where we go from here.
Yeah, Jess Menton, our good friend from Bloomberg News, covers the stock market. She's got a great story out today, and just kind of putting it into context. The first quarter, the stock was off 12%. That's the worst performance relative to the S&P 500 in over a decade, just to put it in perspective.
I mean, usually if you see that kind of downdraft in Apple, you're like, oh, forget it.
Jump.
NASDAQ 100 rolling over. Everything's going to be terrible, and that hasn't been the case. Anurag Rana joins us now, Bloomberg Intelligence Technology Analyst, standing by. So do we breach the 165 low that we saw back in October of 2023? Do we have to go back to earlier next year? Like, where's the bottom, Anurag?
Yeah, it's very tough to say. The only reason is because when you look at Apple, the fundamentals are not good right now because of a lot of pressure in China. And we see no hope at this point that's going to change in the upcoming earnings season. I think the only silver lining for Apple could be if during the June Worldwide Developer Conference, they are able to announce any big AI push into the phones. I mean, that's the only thing that can perhaps go out and give you a new refresh cycle by the end of the year. But other than that, it looks like a pretty bleak year for them on a fundamental basis.
How about from a technical basis? I would think that these guys are buying back stock aggressively. They can even be more aggressive if they wanted to. Does that put kind of a floor for this stock somewhere in or around here, do you think?
Yeah, I've been surprised that they have not been more aggressive in buying back shares over the last few years because they do have the capacity to do it. They spent somewhere around $90 to $100 billion, almost their entire free cash flow buying back shares. But they've talked about being a little more aggressive in principle, but in practice, I've not. You will see, you could say, a lower benchmark or a waterline for them to cross next year. And with some features coming in this year, that maybe next that in 5% growth, maybe we can see 5 to 10% growth on the top line, and I think that can change things around for Apple.
So, is there a bear case that China doesn't turn around? China is no longer a growth market for Apple, be it competitive issues, be it change in investor sentiment towards Western companies and Western technology, be it the economy. They could be in for a Japan-like period of malaise. I mean, you could really paint a reasonable scenario where China's not a growth market for them, ever.
Yeah, and then they have to sit down and look at their strategy and say, do we really go down the chain of cutting down pricing? They have never done that. They've always believed in margins. But if they were to push a lower priced phone, let's say in the emerging markets, whether that's in India, Indonesia, Brazil, I mean, that can really help out and take care of some of that offset in China. But we haven't seen that. I mean, Apple doesn't play that game. Yep. It doesn't, go down that market. But they can actually do that if need be in order to gain market share. But we haven't seen that yet.
So you have CC reporting that President Xi and President Biden talked last night discussing China-U.S. ties, etc. Do you feel like Tim Cook is like calling government officials being like, you guys got to help me out here?
Yeah, see, if you see in the last 1 month, he went to China and he basically promised them that he's going to do more investments in the area. And that is on the back of a lot of discussion about supply chain diversification away from China. So he's made a couple of trips in the last 1 year, basically saying that, listen, we are here for the long run, please help us out. Maybe we need 2 or 3 or more of these phone calls, and China is going to be back up for them.
If I were buying Apple computer today, I would have one catalyst, and that would be AI. That there's no AI in the Apple story, and I'm buying the stock today because I think Cupertino will figure out a way to get AI into the narrative. Would that be a decent call there?
Oh, that would be a very decent call. In fact, the news released by Mark Gurman that they're talking to Google about Google's large language model, I think that's going to really help them if they go out and make that partnership, because Google is the search engine king at this point, and they are the default engine for Apple products. So they have an old relationship. Google pays a lot of money for that search rights on the Apple ecosystem. If Apple's able to go out and showcase that you need to upgrade the phones because you need a better memory and you need more processing power, that is a case for people to go out and, people with older phones of iPhone 11, 12, there is a lot of phones out there that are really old at this point, and, which you need that processing power, you may lead into a refresh cycle out there.
Anurag, what do you feel like, at some point though, does Apple need to do their own AI strategy? Like, they don't tend to do that partnership stuff, right? They kind of cleaned a lot of their ranks with the car, self-driving car, putting that aside. They were supposed to repurpose those people in the AI, and then that didn't happen. I mean, at what point does that become an actual good catalyst for the stock?
So they are pushing a lot of money into that area, but remember, Google's been doing it longer than them, and they are still trying to figure out some of their applications on, similar to ChatGPT. Now, I think, you just can't expect them to, they just shut the car division down a couple of months ago, and, they just moved the engineers. You can't expect them to come out with a product in the next 3 to 6 months. It's going to take some time. Meanwhile, there is nothing wrong in licensing technology from Google. Remember, Apple's not in the search business. They license that technology from somebody. It's possible for the short term, they will license that technology. And after that, once they figure out that things can work on their ecosystem a little bit better as part of their operating system, they don't need that partnership. But, I think in the near term, they do need to, partner with somebody, either Google or OpenAI.
So for this developer conference in June, how big is that going to be for the company and for the stock?
I think it is probably the biggest, moment for them for the last couple of years, as we have seen a reduction or a decline in the growth rate of their products business, which is predominantly, iPhone and all the others. I think this is going to be the biggest catalyst everybody's watching for, and see what can they showcase. If they are able to convince the street that this is going to lead to the next big push in people going up, and not just, products, it's going to help out services also. It's going to make some of those products a little more stickier. People, make fun of Siri, for example, right now. If it's powered by Google, if it has a lot more, firepower to do a lot of operations, maybe I'm not going to open the third-party app that's on my, phone to go out and search for things that I'm doing right now. Maybe I'll just be by default using it. I say this a lot. I mean, Google and Apple, for that matter, control the distribution of the operating system through the mobile apps. That's a very powerful ecosystem. I'll request you guys to look at what was TripAdvisor a few years ago, or what was even Yelp. I mean, those market caps have really gone because people go to Google directly and search for those things rather than going to the applications. So I think if Apple's able to play this thing out properly, their distribution system is strong enough to, really monetize on that.
It's true. I don't trust Yelp anymore. I don't know what that's about, but
that's one of the many challenges, many headwinds that a lot of folks, when they look at Apple, they say this is something that this stock has to deal with. It's a headwind, just like it was for Microsoft for the 80s and 90s until they were able to put that behind them and write a few big checks along the way. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. Alex, John, Prime Minister Benjamin Netanyahu says aid workers in Gaza were killed by an unintended strike by Israeli forces. The Israeli military is expressing sincere sorrow and promising a full investigation into an airstrike in Gaza that hit the Washington-based World Central Kitchen. We get more from Bloomberg's Jody Snyder in the nation's capital.
disaster relief group founded by celebrity chef Jose Andres, who said in a post on X that 7 aid workers were killed from his group in this airstrike. This group has helped oversee construction of a pier and delivery of aid through it to the northern Gaza Strip, which humanitarian agencies have said is badly in need of the aid, given the dire conditions many people are living in there.
Bloomberg's Jody Snyder. There's late word President Biden and China's President Xi Jinping talked by phone this morning. Relations have been strained between the U.S. and China. The two met face-to-face last year in November. A 12-year-old student opened fire at a secondary school in southern Finland, killing one and seriously wounding 2 other students. Police said the suspect was later apprehended just outside Helsinki. A man who spent the past 8 decades making sure people never forgot one of the darkest days in American history has died. Lieutenant Commander Lou Conter was the last remaining survivor of the USS Arizona. The Japan attack accounted for more than 1,100 lives lost on the ship in Pearl Harbor in 1941. 8 years ago, Conter attended the 75th anniversary of the attack.
They call us the heroes, but we're not the heroes. The heroes are the ones that gave everything, their lives that day, and they're still there. And we got married, came home, got married, had children, grandchildren, great-grandchildren. We're just lucky.
Lou Conter was 102. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. This is a day when economic data in the driver's seat for the most part. Good news, bad news scenario. Job openings across the U.S. edging higher during February. So that adds the narrative of a hotter than expected economy, and that suggests the Fed will need to keep interest rates higher for longer, and that is pushing Treasury yields higher and also weighing on risk assets like stocks. Phil Orlando, Federated Global, notes the rate cut expectations have now changed.
The Fed is telling us that inflation is still a problem. It's going to be a problem as the economy comes back. And what all of that means is that there's going to be less rate cuts relative to what the market was expecting just a couple of months ago.
As far as stocks, Tesla, among the most actively traded shares, down right now over 5%. After a big miss on deliveries. And then the healthcare shares, they're the biggest drag in the S&P 500 on news. Medicare is not going to reimburse them what they had expected. The Humana shares will take that. They are down right now 14%. Overall, the S&P 500 down right now 50 points. That's a decline of just about 1%. We're at 5193 on the index. The Dow Jones Industrial Average down 457 points. That's a decline of 1.2%. The NASDAQ 100, 233 points lower, and that is down 1.3%. Two-year yield, that's lower right now by 1 basis point at 469. The 10-year is up 5 basis points, up to 436. And we check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us here. How about this for an investment strategy? Maintain very low exposure to overall stock markets by being long selected high-quality companies and short market indexes. That's what our next guest is up to. Lucas Tomicki joins us here, founder and managing partner of LRT Capital Management, joining us from Austin, Texas. It's got to be overcrowded by now, Austin, Texas. Everybody I know is moving to Austin, Texas.
Agreed.
So anyway, he's down there. Lucas, thanks so much for joining us here. Talk to us about your investment strategy. Did I characterize that right? And how has it performed for you?
Yeah, no, it's I think exactly right what you said. We don't predict what the market is going to do in the short term because I don't think that's something we have any expertise in doing, and frankly, we don't think others can do that. But our strategies have, to put it politely, crushed the market with very low volatility and very low market exposure. So it's worked out fairly well.
What do you do when you wind up seeing, though, like record after record for the overall S&P? I mean, I appreciate today is a little different because we're actually down 1%. So how do you kind of fight against that?
Yeah, so, our strategy, because we're effectively buying quality companies and then we're shorting indexes, which in a simplistic way, the index is quality plus junk. Junk typically outperforms in a type of FOMO market that I think we've had over the last 3-4 months. So it is a little frustrating on a day-to-day basis because you can see, why am I doing all this work when I could just buy Truth Social and make all the money, or super microcomputer? But I think over the longer term, when you have a downturn and they do happen, corrections as we call them, you do see the value of being disciplined and having an actual strategy.
So how do you define high quality companies in the long side of your portfolio?
Sure. So for us, when we're talking about quality, it's really down to a combination of qualitative and quantitative metrics. So we're looking for, number one, companies that have some kind of moat, meaning some kind of ability to earn high rates of return on invested capital, and more importantly, sustain those returns over long periods of time. And here, these are simple things that Buffett has talked about for 50 years, may it be network effects, scale economies, intangible assets, brands, patents, licenses, government approvals. And then that's number one. We're looking for something that can earn a good rate of return. But number two, it has to be able to actually reinvest within that competitive moat. Because if you're just generating cash, generating returns, but you can't reinvest. You're just returning that to shareholders. The moat is kind of in the present and in the past, but not necessarily in the future. And number three, we're looking for management teams that do a reasonably good job of capital allocation. Because ultimately, capital allocation is that link between shareholder value and business value. And so if you have a bad management that allocates capital poorly, then you may have a good business, but you may actually never see the benefit as a shareholder come through. And so every business is different. No business is an A+ in all those three dimensions. And so it depends on the business which one you weigh more. If you think about a Visa, you have an incredible moat. You have a business that grows generally faster than GDP every year. And there, the management doesn't matter that much. I mean, as long as they're not actively setting the company on fire, I'm sorry, but I could become CEO of Visa tomorrow, and I would kick my legs up and probably do nothing for the next 5 years, and very little would change in the trajectory of Visa, the business, right? And then you have other companies like a Danaher or a TransDigm, which are growing through acquisition. So their management, acquisition, and capital allocation strategies matter tremendously.
To that point then, are there sectors that could sort of fit the bill, or is that too hard to dissect? Because it's truly on like a company by company and management basis.
So, there are some sectors where you find companies with more moats than others. So technology, business services tend to lend themselves to high switching costs, intellectual property, network effects, etc. On the flip side, we're not very interested in commoditized businesses. So you're not going to find a lot of mining in our portfolio. You're not going to find, a lot of shipping names, commoditized airlines, those sort of things. We do look for things that have commodity-like exposures where we think there actually is a moat, but the company may trade in a way with a commoditized sector. And because that's very important for a diversification purpose for the portfolio.
Lucas, how many names do you typically have in the long side of your portfolio?
So as of today, we have 94 positions, and we typically are around 80 to 100. But the top 20 names are about 45% of our long exposure. So that should give you a sense of how that balances out. And typically, the larger exposures in our portfolio are the lower volatility names. And so the names like a trade desk, for example, which we own, which is a business that we admire, we think has a durable competitive advantage, but can be very volatile. It's not uncommon to see trade desk up or down 10 or 20%. That's a sub 1% position for us. Whereas something like a Chemed, which is a very stable, very kind of boring business, that's around a 3% position. So we size really based on the volatility contribution of the different pieces in the portfolio.
But before I let you go, do you have AI plays?
We own TSMC, and we think that's probably the best picks and shovels name that we can come up with. There's plenty of AI names and semiconductor companies that are within our portfolio, or that are within our, call it, investable universe. But we don't have sort of the hottest ones that everyone has, be it NVIDIA and others. So TSMC is really the largest direct exposure for us in that space.
And on the short side, do you just short SPX, or how do you play the short side?
So we're shorting mid and small cap indexes, and that's to just match the basis risk of the long side. So typically, most of our companies, we do have things across the market cap spectrum. So TSMC is obviously a giant company. We own Northrop Grumman as well. But actually, most of our names are mid caps. So as a result, we're primarily short mid and in some small cap indexes. And we're short 5 particular indexes. Nothing too fancy, things that you would know.
Right. All right, Lucas, fascinating strategy. Put up some good numbers. So good for you guys. Lucas Tomicki joins us here. He's a founder and managing partner, LRT Capital Management, joining us from Austin, Texas. Long, high quality names. They've got about 80 to 100 names on the long side. Short, the indexes take that market risk out, and they put up some very good performance to note there. S&P 500 off 1% here. The NASDAQ off about 1.3%. We'll have more coming up. This is Bloomberg.
your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom with some of the company stories we're following. Patients struggling to get their hands on the hard-to-find weight loss shot Zepbound have a solution for drug maker Eli Lilly. Release the vials. Zepbound isn't in short supply because there's a lack of medicine, but rather the pre-filled pens that patients use to inject the right dose of the drug. Making that device requires some of the most complex production systems on the planet, according to Eli Lilly's CEO. But there's another way to administer the drug, at least the patients say. Lilly could ditch the pen and sell Zepbound in vials. That would require patients to fill a syringe on their own. Social commerce startup Flip, this is an online marketplace, has raised $144 million in fresh funding. It's looking to take on the likes of Amazon and TikTok. The funding round brings Flip's valuation to $1.05 billion. Flip is trying to stand up by offering only brand name products promoted via video reviews made by shoppers. Now, what items shoppers see is based on a questionnaire that they fill out when they're signing up for the service. And we've been talking about Tesla a lot. The first Tesla Cyber Beast to be offered at public auction, now on sale. So this gives fans a chance to skip the months-long wait that's anticipated for the top-of-the-line version of the electric truck. Sotheby's Motorsports is going to sell the Cyber Beast at no reserve in an online sale. It ends April 9th. The auction organizers expected the Cyber Beast to easily surpass the 99,990 estimated manufacturer's suggested retail price that's currently listed on Tesla's website. This thing has 845 horsepower. Like nice. You need that. Where's Matt when you need him? That's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, listening to Bloomberg Intelligence, I'm Alex Steele alongside Paul Sweeney. We're live in our interactive brokerage studio right here in Midtown Manhattan. Also, catch us on YouTube. We bring you all the top news, and for world and national news, we bring you a special guest and go to Michael Barr. Michael?
Thank you, Alex, Paul, and John. President Joe Biden and China's President Xi Jinping talked by phone this morning. The last time they spoke was last November in California. The U.S. and China have had strained relations. A senior administration official says Biden was set to reiterate with Xi that China should use its leverage with Russia and Iran to enhance stability both around the war in Ukraine and amid turmoil in the Middle East. An Israeli airstrike has killed 7 aid workers with World Central Kitchen, leading the charity to suspend delivery of vital food aid to Gaza. Prime Minister Benjamin Netanyahu acknowledged today that Israeli forces had carried out the unintended strike. Israel Defense Forces spokesman Rear Admiral Daniel Hagari acknowledged the deaths of the World Central Kitchen members in a video statement this morning. Hagari promised that Israel will conduct a thorough and transparent investigation.
We have been reviewing the incident in the highest levels to understand the circumstances of what happened and how it happened. We will be opening a probe to examine this serious incident further.
One of those killed was a U.S.-Canadian citizen. Cyprus said today that aid ships that recently arrived were turning back. The owner of the ship that rammed into a bridge in Baltimore last week, killing 6 workers, is seeking to limit its liability to about $43.7 million. Meanwhile, Maryland Governor Wes Moore says the safety of the rescuers and salvage crews will be top priority during the precarious cleanup operation.
And my directive is to complete this mission with no injuries and no casualties. We've already lost 6 Marylanders to this crisis. I refuse to lose any more.
Governor Moore says a temporary channel on the northeast side of the collapse opened yesterday. And sad news in sports, Larry Lucchino, president of the Boston Red Sox during the team's 3 World Series champions, died today at age 78. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex?
All right. Thank you so much, Michael Barr. Really appreciate it. So just in case you were wondering and you were looking to put down $90 million for your third real estate property in Florida. Unfortunately, that is snapped up. You can no longer do that.
And who did that?
Jeff Bezos,
Oh, okay.
expanding his real estate empire. Third mansion now on South Florida's exclusive Indian Creek Island. He paid about $90 million for an off-market transaction for a 6-bedroom home in the Miami area enclave. This is according to people familiar with the matter. He plans to live there while he tears down the other houses he also bought on the island.
He's doing it the way I would do it. So he shelled out $147 million for 2 mansions in Indian Creek. Now, that's a man-made barrier island that's renowned for its wealth that it's dubbed Billionaire Bunker. Other residents include Jared Kushner, Ivanka Trump, Tom Brady, and Carl Icahn. So it's an island. You have to take a dedicated bridge to get to that, so to keep the riffraff off. So all the homes are on the edge of the island facing out into the water. What's on the interior of the island? A golf course.
Of course.
I mean, that was good thinking there.
So is he like having all 3 of them? Is he tearing them all down to build 3 different houses, or is it like one giant complex now?
I'm guessing he's going to tear down 2 to build one big one.
That's what I was kind of thinking.
But you need a place to hang while you're doing all that.
That's true. It makes sense. And, you know, if you got a couple spare bills, plopping down $90 million shouldn't be that dramatic. And to that point, Forbes Billionaire 2024 list comes out. I mean, he slipped to 3.
Okay.
So, I mean, like, there you go. But apparently his net worth is now $194 billion.
I prefer Rich Go. I trust the numbers, the math for Bloomberg, but we've got him at number 2, $203.7 billion, up $27 billion year to date. So it's been a good year for Jeff Bezos.
You know, it's so hard counting those zeros.
You know who had the best year to date so far in terms of adding money? Mark Zuckerberg. He's up $46.5 billion net worth year to date. Put him at $174.6. So the rich get richer. How about that?
How about that?
All right.
That's a nice way to end the show.
Exactly.
The rich get richer. We support that.
Balance
this
of
is
power.
Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
President Biden and Xi Jinping talk one-on-one for the first time since November. Welcome to Balance of Power, where we'll have much more on that telephone conversation this hour with Bloomberg's Ian Marlowe, as well as Terry Haynes of Pangea Policy. Plus, after an Israeli strike kills 7 humanitarian aid workers from World Central Kitchen, we'll talk about the war in Israel with Michael Knights of the Washington Institute. And of course, it's also primary day. Voters heading to the polls in a number of states, including New York, Connecticut, Rhode Island, and Wisconsin. But how much does it really matter when Trump and Biden already have locked up their respective nominations? We'll pose that question to our political panel, Jeannie Shanzano and Lisa Camuso-Miller, this hour. First, though, let's get the answer to the question of what the markets are doing today. And as always, Charlie Pellet has the answer for us in New York. Hey, Charlie.
Thank you very much, Kaylee. Lines lower across the board with the Dow, the S&P, NASDAQ 100 index all deeply in the red right now. Steep losses right to the numbers because the S&P is now at 5190, down 53 points, a decline now of 1%. We've got the Dow down 478, down 1.2%. The NASDAQ Composite Index down 223, down 1.4%. NASDAQ 100 Index also down by 1.4%. Stocks and bonds dropped around the world as solid economic readings and a rally in commodities spurred speculation that major central banks will keep rates higher for longer. The 10-year at 4.35%, with the 2-year that's yielding 4.68%. Spot gold up $8.50 the ounce now to $22.60, up 0.4%. A rally in crude oil now at $84.90, up by 1.4%. Aside from the macroeconomic picture, valuation concerns after a torrid rally have spurred calls for a pullback. Andrew Sliman is head of Applied Equity Advisors at Morgan Stanley Investment Management. He told us this morning he does welcome the recent broadening of the market.
If you think about the rally in the first quarter until early March, it was only a momentum, AI, weight loss drugs. It was all the same stocks. And then the market those stocks kind of ran out of steam, but instead of pulling the market down, the market rotated into other areas like energy, financials, materials, industrials. That's a very good sign that people are looking for other areas to buy.
Andrew Sliman of Morgan Stanley Investment Management. Tesla suffered its first year-over-year sales drop since the early days of the COVID pandemic. Tesla shares, they are lower now by 5.3%. And Rivian Automotive said it built and delivered more electric vehicles last quarter than Wall Street expected. Rivian shares falling now by 4.4%. Again, recapping, stocks are lower with the S&P down 54 now, down 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash. Balance of Power continues now. Once again, here she is, Kaylee Lines in Washington.
All right, Charlie Pellet, thank you so much with a look at trading on what is the second day of April, which means we're almost 5 months from the last time something like today happened, where President Biden and Chinese President Xi Jinping talked one-on-one. Of course, the last time they did this was back in November at their summit in person in San Francisco. Today, it was just a telephone conversation, and we just got the readout from the White House. The White House statement saying that Biden and Xi had a candid and constructive discussion, discussed AI risks, efforts on climate change, raised concerns over China's support for Russia, and raised issues with unfair trade policies as well in this call. But let's get more details now. Ian Marlowe covers national security and diplomacy for us here at Bloomberg in Washington. He is joining me now in studio. Ian, great to see you as always. What else do we know went down this morning on this phone call?
Yeah, I think one of the key things that's changed, I mean, there's been a sort of laundry list of things that they discussed, counter-narcotics, stuff related to fentanyl, the fentanyl crisis in the U.S., which is one thing, AI regulation, which is something that I've talked about before. One of the new things, though, that they discussed was Chinese support for Russia's economy at a time where Russia's obviously in Ukraine and that war has been dragging on, and the Russian economy has been more resilient than Western observers hoped for when they initially slapped sanctions on. So that was one thing that was brought up that I think is maybe a little bit different from when we had that conversation back in California, you know, a few months ago now. And so that's something, it's obviously a huge thing that U.S. officials are concerned about, Chinese aid to Russia at this time. Yeah.
Well, and it's one thing to raise those concerns, to talk about them, but to what extent, Ian, is this talking for the sake of talking because they promised back in November that they were going to talk more, communicate more, or is real progress made on calls like this?
Yeah, so I think there's always a lot of work that goes into these leader-level calls and summits, and you've seen a sort of a gradual parade of these visits. I was on the first Blinken, Secretary of State Antony Blinken trip to China back in June, which sort of set off this, rolling procession of all these cabinet secretaries going back and forth. But really, we've seen a little bit of agreement on, agreement to keep talking. We've seen agreement to keep talking on fentanyl. We've seen agreement to keep talking between the two militaries. But there hasn't really been too much concrete progress when it comes to, say, China dialing it back in the South China Sea. That was one of the things they talked about on this call. With tensions between the China and the Philippines have risen lately. And so none of these issues are solved. It's just, I think they feel like they should be talking rather than not talking. And, before that trip back in June and before all these different summits, we were in a much different place, a much more tense place. And I think U.S. officials are confident to some extent that they've gotten to a better place, but none of the fundamentals have changed. And I think we have to be realistic about that. And I think there's always the potential for something new, a sort of, spy balloon 2.0 to upset the apple cart to some degree on this.
Well, it's a fair point. It seems that in a lot lately within the U.S.-China relationship, it's one step forward, two steps back, because there's a spy balloon or someone calls someone a dictator or that kind of thing. You talked about the rolling cabinet secretary visits. You, of course, were with Blinken back in June. He is expected to go back to China in the coming weeks, and Treasury Secretary Janet Yellen is actually expected to make a trip of her own this week. I would imagine they're going to reiterate a lot of the themes that we heard were on this call today.
Yeah, exactly. I think, with Yellen, it's a lot of macroeconomic stability and sort of Chinese U.S. cooperation on the global economy. With Blinken's travels, he sort of brings up the sort of laundry list of things that China doesn't always want raised: Taiwan, human rights, detained Americans in China. So his visits tend to be a little bit more tense. But again, we were at a point where basically the Chinese and U.S. sides were sort of reading talking points to each other. And I think there's been enough dialogue over the past 6 to 12 months that I think that U.S. officials feel they're in a slightly better spot where they're slightly beyond reading talking points. They can try and make some progress on these issues, even if fundamental differences are going to be there. It's a weird relationship to sort of grapple with because fundamentally they're competitors, the U.S. and China, but they want to be in a situation where they at least don't have something throwing the relationship, up and down every couple of months, which is where we were sort of around the time Pelosi visited, to Taiwan. Yeah.
Yeah, very good point. You talk about how the U.S. has to handle a relationship with a competitor carefully, with adversaries certainly, but so too with allies. Certainly, Secretary of State Antony Blinken has had his hands full, not just with issues like China, but Israel as well. He was on the call yesterday alongside Jake Sullivan, the National Security Advisor, with their Israeli counterparts to talk about Rafah. We know that they have also agreed to continue those conversations moving forward. But does the U.S. feel like it's making tangible progress in influencing the decisions of the Israeli government when it comes to their military operation in Gaza?
Yeah, it sometimes seems like the U.S.-Israel relationship is more tense than the U.S.-China relationship to some extent, and again, like whereas you have fundamental competition on the U.S.-Israel side, you have this sort of close partnership that's decades and decades old, and this war has just really turned all these things over in the U.S.-Israel relationship. The U.S. is under domestic pressure. Netanyahu is under pressure of his own from the right, to take a harder line on Gaza, on Hamas, and all these things. And so you have this really toxic situation where there's rising casualties in Gaza. No one thinks Israel shouldn't be doing anything about what happened on October 7th. But you end up with this situation now where the U.S. has been calling on Israel to take it easy when it comes to the conflict, try and wind the conflict down, try and strike a deal that will free the hostages and get a ceasefire. And Israel just doesn't seem to be listening. You get all these different situations where the U.S. sort of leans a little bit but doesn't want to put too much pressure on Israel and send the wrong message to Hamas. And so, I was on Blinken's trip to Israel just the other week, and the day we got there, Israel's right-wing government announced that they were seizing new land in the West Bank. And so this is something that sort of happens time and time again. You've got signaling on both sides. You've got domestic political priorities on both sides. Both sides need to seem like they're doing something about the situation, but they're at odds. And I think the U.S. is confronting a situation where they really don't have that much leverage over Israel. They're giving aid. I think they don't feel like they can condition that aid and pull it back, like the military equipment that they keep sending to Israel. Yeah. Some of which is years in the making and won't be delivered until well after this war is over and the rest of it. But it's a tense situation, and I think this meeting, the fact that it was canceled initially, the in-person meeting was canceled, then it was held virtually. They're meant to be holding an in-person meeting, in the coming weeks. That's not a great sign of coordination between two close allies, and I think it's showing you the tension that's underneath that at the moment.
All right, Ian Marlowe, Bloomberg senior reporter covering diplomacy and national security. Thank you so much for giving us the latest today. And now we want to take a look at how markets should be looking at all of these different geopolitical situations. Joining me now, I'm pleased to say, Terry Haynes, founder over at Pangea Policy. So, Terry, certainly there is no shortage of things to discuss on the geopolitical front, but I would first like to get your opinion on the U.S.-China relationship. Xi and Biden are talking. They did so today for the first time since November. Should investors take any solace in that communication, or is there just too much tension in this relationship still to not be hedging that kind of geopolitical risk?
Well, from my view, Kaylee, I think what ends up happening here is that markets will tend to be kind of overbuoyed by this stuff. It's always good that the leaders are talking. Everybody remembers the old Churchill line that jaw, talk is better than war. But beyond that, I wouldn't read too much into it, frankly. It sounds from the White House like there's a laundry list and a litany of the familiar concerns. So, they're talking. That's good. There's advantages for Xi to be talking. He's now put on a happier face with United States business leaders, and it's somewhat recently. So it's somewhat to his advantage to do that. It's also in Biden's best interest to be and to look like publicly the engaged leader bringing up major United States concerns. Beyond that, I'd point out a couple of things. One is that there continues to be concerns about China's economy, and that's at least part of the reason why Secretary Yellen is engaging with the Chinese government on that. And also, there's an awful lot going on when the White House name checks support for Russia. You can be sure that one of the things that's happening underneath that particular surface is checking back and forth with the Chinese on the next Western moves, which not only include potential United States aid for Ukraine, but the idea that the United States is going to, or the NATO and the G7 are going to create funds and other sorts of vehicles to support Ukraine in the overall monetary system. So the United States will want that to be well understood as well. So there's a lot of things going on here underneath the surface, frankly, I think to assuage tensions as much as anything else.
Well, Terry, I'm glad you raised the issue of aid to Ukraine, because obviously we heard from House Speaker Mike Johnson over this past weekend talking about the idea that actually could be on the floor in the form he envisions it, which potentially could include it being a loan rather than outright aid, potentially taking frozen Russian assets to help fund Ukraine's war effort. Is this going to happen? Is this something that could actually pass the House, the Senate, and get a signature from President Biden? Where would you put the odds?
Well, Speaker Johnson's an optimist, but then if you're in the Speaker's chair, you should be. Your job is in part to kind of move the House as an institution forward, and he's trying to do that, and that's fundamentally what he's trying to do. I think what you've seen in the last 24, 48 hours is kind of typical Washington blowback on the Speaker's proposals, but what he means to do by this, frankly, is start a serious dialogue in the House that ends to some sort of a conclusion. And if he can't get aid in the traditional sense, he's going to talk about loans. He's going to talk about seizing assets and using them from Russian oligarchs and the like. He's going to use everything he can in order to show the forward movement on Ukraine aid and Ukraine support. I think that's all to the good in a geopolitical sense, because it shows really where I think the pendulum has been on Ukraine for some time, which is kind of more supportive of Ukraine, more optimistic. But he's got a long way to go. And if he gets something through the House by the end of April, I'd give him 60-65% today on that. But that's optimistic, and he's going to have to be talking to the Senate all along. So the U.S. aid for Ukraine, you're looking at probably late April, early May at the earliest. But beyond that, you've also got these international vehicles that have been discussed much in recent days and reported on by Bloomberg as well.
Well, Terry, there also is the question for Mike Johnson, even if he's optimistic about his ability to actually get the aid on the floor and pass, should he be optimistic about being able to keep the gavel in hand after that, considering there is this motion to vacate from Marjorie Taylor Greene that she has threatened to act on if he does this exact thing, put Ukraine aid on the floor?
Well, that's a fair point. I think Johnson's playing a pretty complicated game. For markets, by the way, I don't... the first thing I'd say is I don't think it matters a whole lot who the House Speaker is. The spending bills have been done for the year. There will be more can kicking for the next fiscal year starting in late September, early October. So the main business of this Congress is finished, number one. Number two, he's playing kind of an inside game with Greene and a few others, appointing Greene to the impeachment prosecutors for Mayorkas, for example, in the Senate. So there's that. And finally, this kind of little purist caucus that's been bedeviling Republican speakers for the last year and a half is not united on this one. And you've got somebody like Matt Gaetz, who was McCarthy's nemesis so far in Johnson's corner on this. So, I tend to think it's an active threat, but it's not a live bomb at this point for Johnson.
All right, Terry Haynes of Pangea Policy, always great to have you here on Bloomberg. Thank you so much for joining us.